A week
And we're
ago.
back here.
I know. Here we are. We never left.
I know, right? The week just goes by so quick, I feel like.
Yeah. What do they say? Like the days go by fast, but the years go fast, the days go slow.
Yes.
I feel that to my core.
But I'm excited about today's live. We're going to talk about VA loans because I feel like knowledge is just key all the time. And I feel like I still get a lot of questions. I still get people, saying that they didn't even get to utilize their VA loan. So we'll talk about it today. But for anybody that's hopping in now or later that does not know me, I'm Alfyn. I'm your local realtor here in Reno and Sparks. And then Jeremiah, go ahead and introduce yourself.
Yeah, my name's Jeremiah Eck. I'm a loan officer with Guild in Reno Sparks in California too.
Ooh, I love that.
Mm.
All right. Well, did you know that some veterans are still, putting down 20% on a home because they didn't realize they may not have to?
Yeah, crazy.
Right. And then I think, and also a lot of veterans think they could only use their VA loan once. I get that a lot. Right.
Yeah, that's not true either.
So if you know anyone that's a veteran, VA, go ahead and comment their names below, put them, tag them, share this with them because this will be very beneficial. We're only doing about 15, 20 minutes, but if you have any questions, put it in the comments. We'd love to answer them.
Yeah.
Yep. So let's go ahead and bust myths and talking about the most powerful home buying benefits available out there, which is the VA loan. So, Jeremiah, what do you got?
So yeah, for some big ones, right? So a lot of people think that you can only have one VA loan, but you can have way more than one. We have someone that has four. I've also had people get a third one, like the VA. When you compare like the all the specifics, right? Is there a funding fee? What is the interest rate compared to conventional? It does not have mortgage insurance, even if you come in with 0% down. So there's a lot of different benefits. But when we actually figure out, does it make sense? As long as you're at like a 580 credit score, you can qualify. And then if you want like the best of the best, you just need a 620. So a lot of people think, oh, I need like a 700 or like a 750 or a 780. You only need a 620 to get the best interest rates on VA loans.
I love it. Okay. Also, let's start with also the basics. Why is a VA loan different from a conventional or FHA?
Well, one of the biggest things is that you have to be a veteran to get one. So unless you're a veteran, you can't qualify, right? For the other, or for you know what I'm trying to say. My goodness. But on VA loans, obviously you have to be a veteran. But then also too, the biggest difference is that you don't have to have a down payment. So when you're buying your house, you just got out of the military or whatever it is, and you've got no money to put down. The VA says, great, will insure part of your loan for you so that in the event that you default or something like that, we'll protect the lenders and everyone else on your behalf. And then when you go get a second VA loan, they may or may not ask you to come in with a little bit of skin in the game in the future, but it just depends. So the biggest things, right? You got to be a veteran. You don't have a down payment. There's no mortgage insurance, right? So on FHA or yeah, FHA and conventional loans, there's always mortgage insurance, regardless of what you put down on FHA. You can put 50% down on FHA and you'll still get hit with the mortgage insurance. VA put 0%, no mortgage insurance, which means you're just paying your mortgage and your taxes and insurance on the property.
I love that. So let's break it down a little bit. So you said you have to be a VA. What if you have a spouse and you want your spouse to be on the loan? Can that spouse be on the loan?
Yeah, if you're married. If you're not married on a VA loan, you can still qualify, but the person or the veteran has to pay their portion of the insurance, right? Which is 12.5% down. So if you're looking at it, it's like, does it make sense to put 12.5% down if you're not married on VA? And that's where we look at other options.
I love that. So there's always plenty of options because I know we have clients wanting to do a joint, but they're not. married or the other party is not a veteran, so it's not possible. They both have to be veterans. Okay, so you mentioned mortgage insurance, which is also called PMI.
Yep.
What does that mean exactly? How much are you really saving?
Yeah, I mean, it depends. There's all these things, right? But let's just say mortgage insurance is about $150 a month, right? So
Mm-hmm.
what that goes to is it goes to literally a mortgage insurance company, and it's like a little premium for conventional loans, and then it goes directly to FHA for FHA loans, and it sits in a pool of money essentially in the event that anyone defaults on their loan, they pull from those funds to pay back everyone else.
Okay, I love that. Do
Yeah.
you have like a rough estimate how much that could be monthly?
Yeah, but I'd say about $150.
150 or so. Yeah, that's still something. It's a big
Yeah.
difference.
No,
Um,
that's a lot.
and then another term that people may not realize, the DTI. What's a DTI?
So debt to income, and this is a huge benefit on VA loans. So on FHA and conventional, it's 50 or 56%, meaning that your debts and your mortgage payment can't be more than 50 or 56% of your gross monthly income, right?
Mm-hmm.
On VA loans, they have technically a requirement of around 50%, but they will approve it at much higher ratios if you have better what they call compensating factors, like a higher credit score, money saved, good job history. Um, what else could we say is in there, right? Like no debts, stuff like that, right? So as long as everything looks good, sometimes you'll get a higher approval. And as an example, last week we had someone get approved on a VA loan at a 68% debt to income ratio. That's crazy.
Would they still look at it at 70, 80?
They
Where did Jeremiah go? Oh, there you go.
sorry. Yeah, after 68%, the system didn't take it.
Okay, okay. And then we
Yeah.
talked about earlier about, utilizing your VA loan more than once. How does that work?
Yeah. So the VA and every mortgage will essentially insure a portion of it. So when you do an FHA loan, there's a funding fee and it's 1.75%. And if you do a VA loan, it depends on what kind of veteran you are. If you are using it for the first time, the second time, if you're exempt or not, and all these things. And so when you're talking about what it means to have more than one, basically the VA says we'll insure more than one VA loan for you. And depending on how much the new house is, you as the
Mhm.
veteran may or may not have to put a little bit of money down.
I like that.
Mhm.
Okay, so how often do you think people do that? Like utilize their VA loan more than once?
I don't know for sure, but I would say probably maybe if there's 10 veterans, maybe like two or three of them.
See, that's not a lot.
Not often.
Because I feel like not a lot of people know, right?
Yeah. Well, and the other big thing too is a lot of veterans believe that the VA has no cost, right? Because there's no down payment. So they forget that you have closing costs, right? On every mortgage you get, there's always closing costs, like an appraisal. The VA still wants one, right? You still have to pay taxes, you have to pay insurance, you still have to pay the title company, all those
Mm-hmm.
different things, right? And so when we look at how we can structure those things, you can ask the seller or use a down payment assistance option to cover those costs. A lot of people, especially real estate agents too, don't know that on a VA loan, if you get a seller credit, the seller can pay off the veteran's debts instead of their closing costs and that's the only loan that allows that.
I love that. So, being able to help a veteran pay off debt, credit card, loan, that's a big, big thing. So, whenever a veteran asks, like, what makes it so special, like, that's definitely one of them.
hmm The other big thing too is a lot of people, especially in Northern Nevada, are into manufactured homes. and a lot of manufactured homes are all over the place and all these kinds of different things. VA is also the only loan that is a traditional mortgage, meaning that's what most people get right before we get into investors and private lending and all this stuff, that will allow a manufactured home to have been moved. So if a manufactured home has been moved from one location to another, the VA says that's fine as long as we get an inspection and it looks good.
I like that. Good to know. I don't think a lot of people knows that.
No.
So if you're shopping for a home, what should a veteran be paying attention to?
I would pay attention to making sure that they have good credit, right? At least like a 580. Ideally, you want to get to a 620, so you can get some decent numbers in there. And then also, too, I would just make sure that you're not charging up all your credit cards, you're not charging up all these different things so that you can qualify for the most, right? A lot of people don't realize that the more you spend on your debts, the lower you qualify for on a mortgage. So if you have high credit cards and high this and high that, it's going to be harder to get the amount potentially that you want. And then also too, I would just make sure that they know that they can qualify. Just because a lot of people will get into like, oh, I should qualify for a VA loan, but they only served maybe 90 days, or maybe they, were dishonorably discharged, right? So all these little things the VA does take very seriously, and sometimes we have to make sure that you actually are approved for the VA loan.
I like that. Okay. And then could you explain a little bit more what's the funding fee?
Yeah. A funding fee is a percentage of the loan that is typically financed into the loan. And then that portion goes to, like I was saying earlier, just like a bucket or pool of money in the event that anyone defaults. So if you are a non exempt veteran, meaning that you are required to pay the VA funding fee, then, like I was saying, that amount usually typically is financed in. It goes into this pool of money. And then if you default, or if Joe next door defaults, right, they'll pull from those funds to pay everyone back, and that's essentially what the funding fee is intended for.
And then is there a way you don't have to pay that?
If you are exempt, yep. So if the VA says that, what, like you had a medical thing, or whatever it is, right, you can be exempt from the funding fee. And then if you're going to put no money down, and your house is 500,000, then your loan's going to be 500,000 because you're not putting anything down.
Perfect. So anyone that's watching now or later, I know we're throwing a lot of terms. If you want a little bit more like clarity, drop it in the comments. We'll be able to answer. Well, mainly Jeremiah for sure. So okay, let's do a little bit fun round. I want to do some rapid, questions. So just give me rapid answers.
Okay, I'll keep it quick.
All right. What's the best score for VA?
620.
Okay, and then do you need 20% down?
No.
Can I buy a condo
Yeah.
for VA? Can you buy a manufactured home?
Yeah.
Can I use a gift for closing costs?
100%.
Can sellers help with costs?
They can.
Can I use my VA benefit more than once?
Yes.
All right, so a lot of these we've covered already with our talks. So I'm so excited. But other than that, I know there's more to it. A lot to dig deep when it comes to VA, a lot of different scenarios as well. And I feel like every client is definitely different. So if you want to see what your options are, feel free to reach out. You have me, you have Jeremiah. We're a great team, and we'll be able to serve you and get you to the finish line. So,
Yeah.
other than that, Jeremiah, do you have any other like closing costs? Anything you'd like to add on to a quick overview of VA loans?
Yeah, the only thing I will say is if you're a veteran, make sure you have a copy of a DD 214, right? Because if we go to pull your certificate of eligibility, is what it's called through the VA system, and it's not there, then we have to send in a DD 214 or what they call an NGB 22. So one of those two documents, make sure you have readily available. That'd be
How
my
can
best
they
piece of
get that?
advice.
How can they get that document?
You can go to your most recent commanding officer, I think is what it's called, or you can just go on to the VA website and then you could submit your information and then request it that way.
Okay, perfect. And one last question, Jeremiah. What do you think is the biggest mistake veterans make when it comes to using their VA loan benefit?
I think the biggest thing that people do on VA is that they forget that they're closing costs, but then also too, they think they have to have good credit. So like you don't have to have good credit and you don't have to have any money. We can
That is
find the
so
money.
true. I've talked to one
Mhm,
just recently and had to explain closing costs because,
mhm.
in their head, they're like, I'm zero everything, zero on the table. So had to really explain, well, we gotta negotiate that. So, closing costs or else it's money out of pocket. So,
Yeah,
but yeah,
you brought it.
totally agree. So, again, thank you so much for watching. If you're watching now or later, leave us a comment. We'd love to answer any of your questions. Or if you know anyone that's looking and they're a veteran and they'd like to know their benefits, reach out. We'd love to help.
Yeah. Let us know.